Hey guys, hope you guys had a great week trading. Let's do our weekly video wrap up. So, honestly, today really gave me vibes of last week. So it's almost like deja vu. So this was Monday last week. We had a nice 2.5% green day. Then we went up, had a 1.7, fell back for Wednesday and Thursday with a nice little hammer candle here, and then we rocketed 2.4%. And I vividly remember on this day right here, I was expecting us to come down and retrace to 360 or 357. However, we had a huge Monday and then a nice Tuesday. Wednesday we retraced, Thursday we retraced with a technical hammer candle, and then what happened? We had a 2.4% green day. And what was I expecting? I was expecting us to come down to 378 and break down more. So, literal deja vu for my life today. But what I missed, and I realized how I misplayed today, and I definitely misplayed today, was that I missed this 379.8 double bottom and daily 8 EMA support bounce and up. Now, part of the reason I missed that is because pre-market we were sitting right here about 378 around 9 a.m. and after hours, if you remember, we were down all the way like 373.8, I believe. So obviously there was no indication, especially after hours yesterday, that we were going to see a big move up. So I was expecting us to break down, but we end up actually doing about a 3.4% total swing from low to high, which is pretty impressive. Biggest thing I'm seeing right now is that we clearly have established 370, we'll call it 380 as support, and we are about to test 390.1 resistance. As you can see, we have not broken through there since September 15th, and we even had a double bottom before there. This is the highest candle close since September 19th. I will be looking for Monday for us to break through this 390.2 and start trying to head up this way. Pretty much until we break this red bull channel here, I'm bullish on the markets. I talked about this in my written TA, but pretty much I'm expecting Monday and Tuesday to move us up somewhere in this range. Wednesday is FOMOC, so the thing about FOMOC is that we're still clearly rallying on the fact that Fed's going to slow rates. Not a pivot, but slow their rates come December's hike. So this will be the last 75 basis point, and then we're either going to get a 25 or a 50 basis point hike in December, is what they think. If Jay Powell comes out on Wednesday and says, yep, we think inflation is going to slow, we're going to slow our rates, you better believe we're going to end up in this range before CPI on the 10th. However, if Jay Powell says, no, we don't have inflation under control, there's no reason yet to slow our rate hikes, then you better believe we're going to end up back down in this range before CPI. And then CPI, regardless of whether we're here or here, is going to probably be really bad this next time. And that is going to cause a breakdown, in my opinion. So I am bullish until Wednesday at 2:30, and then I will decide, and I'm either going to be bullish for a week or I'm going to be bearish for a while. Looking at the weekly, we did have a nice V-bottom as I was mentioning last week. We held right here this 375.7 as support now, and we broke through level resistance right here at 385, which really I think I'm going to update that up to probably right here at 390. As you can see, there's been a lot of price action there, so I actually do prefer to update that. I think that's a better representation of what the next weekly resistance level is, and honestly that actually obviously goes perfect with our daily resistance, which is also right there at the weekly 220 EMA. We did touch it, but we couldn't get through it. But now the daily 8 EMA is support. You can see we have our support line all the way down here to 375.9, where we can break down and touch that and still be bullish. Key resistance is going to be that 390, and then from there we have the 100 and the 50 weekly EMAs, which then our next real major resistance is about 409. We broke through the bull channel here, or bear channel here, obviously, as I had suspected we would last week. I did obviously expect a little bit of a breakdown, and this is our first full candle over the 200 EMA since the beginning of September. Looking at futures, the biggest thing that happened on futures today is we broke this August-September bear channel resistance. So effectively, SPY, futures, Apple, Tesla even, everybody has broken their bear channels. Obviously not the 2022 bear channels, but we have broken the short-term bear channel that we've been in for 2 months now. So obviously that opens the upside. So we can go ahead and get rid of this line now, and you can see how that kind of opens things up. Really, now that we're over the 50% retracement and futures clearly established 37.95 as support, I'm going to be looking for us to break through this 39.25 is our next major level, which you can see we touched it, which is the daily 100 EMA, and we want to turn this into support. So next week we're going to look for us to get over 39.25 and confirm it as support, and then we're going to start talking about the daily 200 EMA, which you can see we rejected twice now. We have not retested it since this was Jackson Hole and this was CPI. Ironic, right? So honestly, what could happen is we could make our way up here, which this is Wednesday, to about 40.30, which is where FOMO comes in on Wednesday, and then we might touch it and we might dump from there. Something that might actually happen. Key support though is going to be all the way down here at 37.95 for Monday. So as long as we're in this red bull channel, I'm bullish. I believe we're going to attempt to establish this 50 EMA as actual real support, but honestly right here, this 38.75 is going to be a really strong support level too. Futures weekly, same thing. We had a nice V bottom here. We're through the bear channel. We just have a really nice V bottom. Pretty much as long as we hold this support right here, there's no reason to be bearish. Interestingly enough, here's the JPM collar at 38.70. We are over that. Much like here, we rallied over the collar. I can't remember exactly where it was. I think it was around like 4,100 though. We rallied quite a bit over it. So it's possible we could rally over it before we see our next downturn. Key level resistance right here is at 39.25, as I mentioned. And then from there, we pretty much have the 100 right here at 40.10. And then we got 40.70-ish for the 50. And then our really next major level resistance is 40.85 to 4100. Key support will be right here at 37.75 though, if we have any sort of retracement to stay bullish. Looking at Apple, what a wild day for Apple. I looked it up at one point at the peak of the day. Had you bought a 155 call at open, mind you, at open, it was, I think, 2 pennies. It closed at 2.51-ish at the highest, $2.51 at the highest. That would have been a 10,000% gain on an option. Crazy. Crazy, crazy. Anyways, what a wild day for I cannot believe this. Especially if you think about after hours where we were down here in the 130s. Let's see, I don't remember how, I think we broke down to, let's see, all the way down to 136. That's just insane. So we were down, we went from here. That's how much, this is how much room Apple covered. I mean, literally a $20 move basically in 12 hours. That's just insane. 24 hours, that's insane. Anyways, most important thing I see right here is we came up and we touched 157.5 and hard rejected. Could not break through it. And then we ended up settling right down here at 155.8. Most important thing that happened, and this is the first time that Apple has closed over the 8, 20, 50, 100, and 200 EMA since September 12th. So we're either going to get a top and we're going to dump, or we're going to try to push through and establish this right here at 153.6 as support, which should be the 200 EMA on Monday. So we're going to probably try to establish this as support, and we're still going to try to push up. Now that our bull, we can try to adjust this a little bit here. Oh, look at that. Pretty perfect if you adjust it just about right there. So that might be, this might be our new bull channel. So that really does open quite a bit of upside here. Looking at the weekly, same thing. And interesting enough, is that SPY, futures, and Apple, their weekly candle before today, of course, was extremely bearish. They were all these huge gravestone dojis that were just going to set us up for a massive drop for next week. However, with this massive green day we had today, this really sets up a nice continuation move for next week for really the whole market, honestly. Key thing is that we really touched this 155.8 level but couldn't close over it. But we did close over all the EMAs again too, which is really important. So for this V-bottom bull support here. You really probably don't really have like a nice channel, but kind of look at something like that probably. We'll just kind of have to adjust this as things go on. But key support is going to be all the way down here at 150.7, and then all the way at 149.2 is actual channel support. So we could retrace to 149.2 next week and still be bullish. Key resistance is going to come in at 161.2, and then eventually right here at 163.5. Tesla. So Tesla's always a tough one. I played a perfect put on it this morning when it initially had rejected right here. So I had tried to break out, couldn't do it. And then when we started breaking down right here in this candle, I took a put, closed it for a nice, I don't even know what I get on that, 60% gain. Really, really nice win. But that's where I went wrong, is we had closed under this 219 support under here, and I had anticipated that we were going to touch 215. However, it had found all the support in the world. So what I'm kind of looking at here is right here what happened on the 24th is kind of what happened today. We had this kind of looked like we should break out, but instead it drops down, gives us a nice dragonfly doji. Today's is actually a hanging man though. Holding over the 8 EMA here today and establishing 224.9 as support again. I think we're going to see some upside. I would have liked to have seen it taken out 230 end of day and maybe closed over that daily 20 EMA, but I'm looking for it to take out that area and stay in this black bull channel. If we can break through this resistance line here, then we're going to be looking at 227.7 as the resistance, and then from there, really next week, we could go all the way before FOMOC. We could end up somewhere up here in the 250 range is kind of what I'm thinking. Looking at Tesla weekly, we really have a nice consolidation right here from 204.8 to 228.4. We're going to want to see this 228.4 be established as support though. So we're going to want to see a nice candle open and kind of hold this most of the week, and then we're going to want to see it push up. Big resistance is going to come right here at 245, which is going to be the 100 EMA on the weekly and the 8 EMA. If we can break through that, then we're going to be looking at 255 and then possibly all the way up to 262.47. There is still a daily and a weekly gap right here. Key support, though, if we do break down, is going to be that 204.5. I don't really foresee this level breaking. If we happen to touch it again, I think anything in this range is definitely a call opportunity, unless the market is really breaking down, like, FOMOC is bad and CPI is bad, then I don't really care about this level as much. But in a normal market like this, I like this level. The VIX is really selling off. I kind of mentioned this earlier in the week that I was thinking once this breakdown started happening that they're going to try to unwind the VIX before FOMOC. That was the big issue right here on CPI, was that the VIX, or in this area for the VIX and stuff like that, CPI was the VIX was so elevated that even the bad news, I felt like it couldn't elevate anymore, or at least I didn't want it to. So what they're going to do is they're going to try to bring the VIX all the way down here. And interestingly enough, this is the lowest the VIX has been since last FOMOC meeting, which was on the 21st. So that's kind of interesting. But what I'm looking for is the VIX to kind of come in this 23.6 to 24.7 range before FOMOC happens on Wednesday. From there, I think we're going to see a push up, or if it's good, we could really end up back down here, and then that opens a wide range of possibilities. All right, I hope you guys had a great week trading. If you guys didn't catch it, I made a nice post in the Discord and on Reddit about how I turned my 2 months of red into 2 months of green. I'm on an 8-week winning streak right now. Some really good stuff in there, but basically what it comes down to, just a short gist of it, is stop loss. Looking back at my trading, not even just for those 2 months that I was red, but really for the whole year. I did an analysis back in July on this actually, but had I used a 20% stop loss on every single trade I made for the whole year, and I don't change my win rate, I don't change my position size, nothing like that, from January till July, I would have doubled my profits, and I would have doubled my account size, because I would have taken half the profits I made, I lost in letting stop losses go. And really, that's the biggest thing. Once I never, even when in my 2 months of really bad trading and stuff like that, and my worst ever week was a 54.5% win rate. Outside of that, for those 8 weeks that I was red, well, two of them I was green, but most of it I was red for those 2 months. I still averaged a 72% win rate. So the big issue was the stop losses. I was letting a position go so red that it was erasing all my gains for the week. If you know the 10% win rate only or percent gains per trade, like goal, it only works if you mitigate your losses. If you have 10% gains, that's great, but if you let a negative something go to like negative 50%, then you just wiped out a whole week's worth of trades. Basically, you gotta mitigate your losses. Once I started doing that, that's what really turned my trading around and really made me profitable. So maybe if I have some time this weekend, I'll do a video on that, and I'll try to explain some more of that and whatnot. But all right, I hope you guys had a great day trading and a good week trading, and I hope you guys have a good weekend. See you guys later. Thanks for tuning into this video. Hope you guys enjoyed it. If you like what you saw, go ahead and hit the like and subscribe button to stay updated. I am providing my Discord link right here. That's a lifetime link. If it doesn't work, go ahead and send me a message and I will get you a new link. I do have a pre-market update I do every day where I update with supports and resistances and different scenarios that might play out through the day. I also do a live commentary throughout the day with updates and changes, and I do push out buy and sell alerts on SPY and other tickers that I'm trading at the time. Currently, membership is $20 per month or $228 per year. You can follow me on YouTube, Twitter, Instagram, or TikTok under SPY Optionaire or Reddit under Daddy Dirch.